Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello from Hong Kong and lots of places in Asia. You're watching Thursday Squawk right here on CNBC Asia. I'm Bernie Lowe in Hong Kong. Morning, Mark.
And good morning, Bernie. Good morning, everybody. Live in Beijing, I'm Martin Sung at the Chinese Communist Party's 19th Congress, where today it's all about the economy. Can he manage a slowing economy while maintaining social stability? That is crucial.
Big question. We'll attempt to answer, folks. And the bulls in the driving seat, meantime, the Dow closing above 23,000 for the first time. Big Blue, IBM leading the charge, gaining 9%, the best day in almost 9 years. Woo-ha! And China's Chudian goes public. What a day for an IPO, enjoying a blockbuster day in the Big Apple. The Alibaba-backed fintech firm spiking as much as 48% over there. And in an exclusive interview with us at CNBC, Wells Fargo CEO says he's confident the bank will get back the growth it lost during the fake account scandal. Just don't do it again. Yes, sirree. In the space of just over 50 days, we punched through 23,000 on the Dow Jones Industrial. Should be a positive lead, at least a big pom-pom for us to follow here in Asia. So let's check how things are going down south in the Tasman Sea, or around the Tasman Sea. Australia, come on, get with the program there. I know you just opened up, so we'll give you a little time to get through the alphabetical order. New Zealand across the Tasman Sea has been open for a couple of hours. Are they looking any better on this Thursday morning? The answer is no, not yet. Come on, folks, get with it. They're happy on Wall Street, means the world's okay for another day. Japan starts trading at the top of the hour, and the Chicago Merc giving us a pricing of, give me the number there, give me the big number. Fresh 21-year high, right? 21,475 is the active contract. Looks like 140 tacked on to the spot close in the market yesterday. The China Communist Party Congress underway now in Beijing. President Xi Jinping kicking it off with a monster 3.5-hour speech. He's covered so much ground. It's hard to know where to start. So let's not start, Marty. Let's just hop on the train at some point here. Wow, he went, took us on a large tour, wanting to do this and that. A lot of macro stuff, but the devil's in the details, right?
Absolutely, Bernie, you're right. I guess it was an epic speech, wasn't it? 3.5 hours. Not quite the War and Peace of speeches, but, well, long enough, and certainly setting a record for a sitting Chinese president here. But what's happening today is not really that much going on. Just to my right here at the Great Hall of the People, you can't see. They've broken up into small groups, the delegates have, 2,300 of them, to talk about the work report, which is essentially the speech that Xi Jinping gave yesterday. But today, really, the focus is on the economy. Later to this morning, in about, say, 2 hours' time or so, 3 hours' time, excuse me, we've got Q3 GDP numbers coming out. That number should come in at about 6.8%. So we need to note that. There's also a clutch of other performance data coming out. FAI, fixed asset investment, retail sales, industrial production, the usual things. So we'll be watching those as well. But the picture right now is it is a slowing economy here in China. And for Xi Jinping, the challenge is going to be managing a slowing economy while at the same time maintaining social stability. This is all important for a country like China, 1.4 billion people. Keeping these people employed and fed and off the streets, and rather than, let's say, demonstrating, is a challenge for any Chinese leader here. But there's a bit of hope here, because PBOC boss Zhou Xiaochuan a couple of days ago said he expects in the second half of this year, the last 6 months of 2017, growth to pick up to about 7%. So that should be pretty positive. We'll see whether that happens or not. But Bernie, what I want to talk about right now is, with Xi Jinping consolidating his power at this Congress here, what exactly he's going to do with it, especially with regards to the economy. Is he going to be really an economic reformer? And I want to give you a couple of bits of information here which may sway your view. I don't know. You tell me. We can talk about it later. Officially, it is supposed to be the Prime Minister, Li Keqiang, who's supposed to be in charge of the economy. That is not the case now. One, because politically, Li Keqiang has been sidelined politically by by Xi Jinping. But more importantly, because now economic policy making rests with something called work groups. Excuse me, not work groups, small leading groups. These are small influential committees which interface between the state as well, the party as well as the government, and that lead.
Okay, connection problems. Once again, the bandwidth demands are very, very intense at a thing like the 19th Communist Party Congress. So we will revisit and get back to just outside the Great Hall of the People. You can imagine there's so many international media there and so many people there, frankly, that are connecting that there are problems with the wavelength. So to be continued. Meantime, there are only so many ways you can say it, and normally it's up to me. Yes, we're scaling new heights and scaling new mountain peaks. Hey, how's that? Overnight, the Dow powering through 23,000, latest 1,000-point gain, taking roughly half the time it took to advance from 21 to 22,000. IBM was one of the big movers. The tech giant seeing its best day since January of 2009 after hinting a return to revenue growth after reporting its 22nd straight quarter of decline. So you go down low enough for long enough and things kind of bounce back like a rubber band. Well, almost 2 years of rubber band there. Alibaba-backed Qudian launched its market debut, and what a day to do it with quite a bang. Shares of the Chinese microlender popping as much as 48% on the first day of trading. Sherry, this was an amazing windfall, and I think it was a confluence of events, and they the company at the right place at the right time on a day when the Dow hit 23,000. They were surrounded by a lot of feel-good here. Now, when I looked at the company, and I kind of thought to myself, gee, it's such a simple concept, but you take it from the old style where you go up to a window with bars on it and ask for a payday loan, and you put it on a mobile phone, and it becomes a lot sexier, doesn't it?
No window, no bars,
nope.
As long as you have that application on your mobile phone. And I think the fact that we didn't really have a U.S. equivalent, at least the publicly traded ones in the U.S. market, really helped sort of drive up that appetite. And of course, there is a lot of appetite for Asian companies, the listings in the U.S. as well. And also the fact that this company is actually backed by Alibaba's Ant Financial. So rising as much as a 48% at 1 point percentage-wise. This actually makes it the biggest gainer on New York Stock Exchange overnight, and raising about $900 million US. So you can see what kind of action we've had yesterday right there in the board there. So quite an amazing debut for this company. So it's a Chinese consumer micro lender that only functions on the mobile application. So basically targeting young Chinese people, young Chinese college students who are looking for micro lending. They can't really get that kind of loan or credit through the traditional way because they simply don't have the credit data. Now, is there any concern about potential delinquencies here? Now, the company's founder and CEO actually came on CNBC overnight and said this: really big data makes it okay. Take a listen.
U.S., the credit card history is very long, about dozens of years. But in China, only last 10 years. Because in China now, it's a cashless society. The Alipay account is now China. You even don't need to take any money to outside. So we are now actually we are number one of the virtual credit card account in China. So it's different people, different styles, different consumers.
Now, this IPO values the company at around $11.67 billion US. So basically makes it the biggest IPO in the US market by a Chinese company. The company says that they're going to use this proceeds from this public trading debut to find more borrowers and potential acquisitions. And I thought that was pretty interesting. What kind of companies that they're going to go after in this kind of environment with so much demand for online anything in China.
Maybe they can get into furniture rental and TV rentals. And,
whoever who want to rent, borrow money. And I
can't help but think that they're going down a dangerous path here. I mean, the average loan is like under $200. I mean, they're small.
As low as $60.
Yeah, I mean, if you need something, I mean, it's instant gratification. I mean, there are pros and cons. I mean, the pro is it helps the economy because it gets consumers out there and spending money they don't have. On the other hand, if you need $60, maybe you should try to save it or find ways, around it rather than borrow it, because these interest rates are not going to be cheap, are they? I mean, compared to mortgages and longer term.
Well, that's the very point that he was trying to sort of address here. Really big data really makes it okay. So hopefully the really big data that he was talking about, that his company or his operation manages to gather, makes it, prudent enough to make the right decision.
Yeah, well, doing it by mobile, I guess I guess a debt collector doesn't knock on your door at 3 a.m. They just kind of lock up your mobile or send you nasty messages.
Certainly a different world now.
It's a very, very different world. Yeah, we're all attached to the next parallel universe by our mobiles. Thanks, Sherry. Australian stocks online top of the hour. Let's get out to Matt for more. Matt, last time I checked, the ASX was underwater. What's wrong? Dow's at 23,000. Come on.
Well, how quickly things can change, Bernie. We're now higher by about 0.1%. The market was called to a flat open, but we are managing to gain some traction, up by about 7 points, 5,897. So the Australian market still trading right around these 5-month highs. Of course, we'll be waiting on the China GDP print to cross later on this morning. That could influence trade in the overall market if we do, of course, get a shock to the up or downside, and to the currency as well, which is, of course, sitting at 78.47. Ahead of the China data, we're going to be getting Australian jobs numbers for the month of September. We are expecting the Australian economy to have created about 15,000 jobs over the most recent snapshot, but the jobless rate is seen holding steady at 5.6% over the month, which is where it has been, as you can see on our wall right there, for quite some time. Few stock-specific stories we're watching today. Australian pharmaceutical industries is one of those. Profit numbers out from this company. Full-year net profit was up by 1.4% to 52.4 million. It will pay out a final dividend of 3.5 cents per share. We've got the stock higher by about 0.6%. We're watching some quarterly production reports over at South 32. The stock is underwater. We saw Q1 production looking fairly weak, particularly on the coal side of things. Energy coal down by 14% in the first quarter on year, while coking coal was off by 66%, so the stock weaker by about 2.5%. We saw Woodside, the stock also lower, reveal that its Q3 production was down by 7% to 20.3 million barrels as opposed to 25.2 million a year ago. It also trimmed its guidance for full-year output. Santos, on the other hand, revealing that its quarterly production was up by 2% to 15 million barrels on a 3% gain in revenue. It's upgraded its full-year guidance, and the stock responding accordingly with a gain of about 0.75%. Bernie, back to you.
Okay. Hoffer, portfolio manager at Thornburg Investment Management, joins us from Santa Fe, New Mexico. Jeff, good evening to you. I know you're getting worried, aren't you? You didn't think we're going to go from 21 to 22 to 23 with this kind of speed.
Certainly not with this kind of speed. That's for sure. You know, the markets, in my opinion, are a little bit challenged from this point going forward. You know, the biggest challenge I see is just a lack of symmetry in the market. So there's a number of large speed bumps on the immediate horizon, right? Central banks being one of the biggest questions in markets, with the upcoming ECB sometime next week, a likely taper out of there. The Fed is actually going to begin bringing its balance sheet down. A lot of tailwinds that had been supporting the markets in the past number of months and certainly number of years that have propped up asset prices are at minimum becoming diminishing tailwinds, if not outright headwinds. And that'll be a challenge for the markets going forward, with right now just kind of excess optimism priced in my opinion.
Where's that optimism coming from? And how sticky is it? How committed, how dedicated to staying in the market do you get a sense that it is?
Yeah, I mean, that's the million-dollar question. I think for quite some time, certainly markets have been expecting at minimum a pullback. Now, we definitely saw a pullback in early 16, but since then, it's largely been off to the races. I think going forward at this point, with volatility kind of setting new lows almost on a daily basis, I mean, not exactly, but certainly volatility sitting at very low levels here, it doesn't take much to disrupt the market, right? So it could come from a geopolitical risk like North Korea tensions and U.S. It could come from disappointments on the political front within the U.S. And tax reform. It could certainly come from, again, as I was mentioning, a pullback of central banks, right? I mean, central banks are going from some of the largest purchasers in the world of all asset classes to actually, in some cases, likely to negative, net supply. So that'll be a challenge the market will have to digest. And my guess is it doesn't take much for the markets to react in a bit more violent fashion than is currently priced in.
Jeff, I have to say, though, considering what the behavior of fund flows out of the market, it's kind of amazing to me that the markets could mark new milestones like this. I mean, the folks at Lipper have calculated that $34 billion was pulled from U.S. equity funds in the third quarter. So we've had a net outflow. So whatever's coming into the market has got to be like new retail investors, domestic investors who've been on the sidelines enough, kind of sick of money sitting around making 0.1% in money market accounts and saying, I don't want to miss all of this. There's something going on in that department.
Yeah, absolutely. You're right. There is. We focus a lot on income opportunities here, and in a world of very low and depressed rates, providing income to investors has been a challenge. If you're sitting on the sidelines, it's incredibly painful to watch markets going up day after day after day. I think one of the big things, and what might be mispriced by the market as well, is there's been a tremendous flow from active to passive. We at Thornburg are certainly big believers in active management. We pride ourselves on fundamental bottom-up analysis. And there's a concern that where we have seen those flows go in will only make the potential unwind that much more disruptive when and if it happens. Do I think it happens in the immediate future? I don't, but I do think that there are a number of headwinds that are presenting themselves that the market will have to digest in the relatively near term, and central bank easing being one of the primary ones.
Right. And what is the alternative then, Jeff, in your mind? Would it be ex-U.S. equities, or would it be cash, cash cushions, or what?
I think without that immediate catalyst, and to be honest, right, I mean, markets are generally bad at predicting exactly what the catalyst is and pricing in it ahead of time. And with that reality, I think the best and most prudent thing investors can be doing at this point is focusing on perhaps companies and opportunities that would perform better, slightly more defensive type positions. One nice part about a continual up and to the right type movement with markets is a rising tide lifts all boats. So you're able to pare back potential volatility in a portfolio while still participating in the vast majority of the upside. The benefit to that is when the market does finally turn, you have a much more defensively positioned portfolio, which allows you to stay in the game and take advantage of that dislocation when and if it does present itself.
Jeff from Thornburg, thank you very much. For black stuff in the green overnight, oil tracking north as uncertainty remains in Iraq. And on reports that OPEC favors a 9-month extension to the production cut deal. Let's bring in Sri. Sri, these OPEC cuts, are working so well. Why not extend them to the end of 2018? That seems to be the thinking.
Arguably, let's take stock of the supply fundamentals first, because that's what it comes down to. It comes down to the rebalancing act in the oil market, which is underway. But when you look at overall inventories, especially stateside, yes, we did see a 5.7 million barrel draw in inventories, but they are still around the upper end of the 5-year range. So there's still some work to do. And what that means for OPEC is that this oversupply is still very, very stubborn. How do you resolve that? You can extend or you can prolong the duration of the supply cuts. The counter argument here, Bernie, is that OPEC has the price more or less where it wants it to be in this new range of between $50 and $60 a barrel. So the market seems to have shifted now. And if that range does persist to the November the 30th meeting in Vienna, the OPEC policy meeting, then that may reduce the urgency for OPEC to act. So price, as always, Bernie, is the final arbiter here.
Yeah, Shreve, there's still some unknowns out there, right? Some swing factors. There are producers that aren't pumping at full capacity because of because of geopolitical strife in months past, Libya being among them. So we don't have a fully lubricated oil machine in play yet, right? There are still some parts that have yet to really get up to speed. Mm-hmm.
I would say that the biggest risk for OPEC is, and the biggest wild card, is the response of US shale, because they are in a sweet spot right now between $45 and $55 a barrel. They can pivot very, very quickly and very nimbly to raise production, and that's what they are doing. The US, in fact, and this is a relatively new supply dynamic, is shipping record volumes, record exports of crude oil to international markets, including markets over here in Asia. So that's really something of a paradigm shift when you consider that high-growth Asia was OPEC's backyard in terms of demand. That is now being subverted by the US. So in many ways, the US is arguably the new swing producer these days, and not OPEC. And it's the big wild card for the Gulf producers, Bernie.
Yes, is 60 still the cap? I mean, that seems to be sort of the unofficial cap that we've discussed with a lot of guests. In the high 50s, the shale producers really have the incentive to get out there and produce. That hasn't changed, has it? Their costs should be coming down longer term, shouldn't it?
It is the cap. I don't think that we're going to see any big spikes above that 60 threshold. And I'll say this about the US producers. They are going to go... they're not necessarily going to go at a blistering speed, because there are some factors that are holding them back, Bernie. And what I've been hearing in the Permian especially is that as a result of the capex cuts at the depth of the oil price collapse, there's been a lot of job cuts as well in that region. So the oil producers over there are finding it difficult to get the crews, and that's going to be something of a restraint in terms of going hell for leather in terms of the production response.
Okay, very good, sir. We'll see you, and we'll be talking oil with Faridin Fesharaki soon. Meantime, well...
The bulls in the driving seat, the Dow closing above 23,000 for the first time. IBM leading the charge, gaining 9% for its best day in as many years. And China's Qudian goes public, enjoying a blockbuster day in New York. The Baba-backed fintech firm spiking as much as 48% in New York. It's 6:30. We are 30 minutes away from the open in Tokyo. SGX Nikkei futures sent for its best day in as many years. And China's Qudian goes public, enjoying a blockbuster day in New York. The Baba-backed fintech firm spiking as much as 48% in New York. It's 6:30. We are 30 minutes away from the open in Tokyo. SGX Nikkei futures pointing to a stronger start. The implied open here, 21,450. Of course, we have new fresh records coming through from Wall Street. We have dollar yen currently trading 113.01. Bernie.
Okay, we are setting records this week, that's for sure. Thanks, Em. President Trump has apparently done something of an about-face on health care. The White House now saying the president opposes a bipartisan deal that he backed earlier this week. The deal was meant to stabilize Obamacare for the next couple of years by restoring subsidies to health insurers. Senior Republicans also speaking out against it. Lamar Alexander, a Republican, and Senator Patty Murray had penned this bipartisan approach, and the president seemed to be supportive, but now the White House says nay. U.S. Treasury Secretary Mnuchin has issued a warning to Congress. He believes the U.S. stock market will shed a significant amount of gains if lawmakers don't pass tax reform. His comments come on the eve of a critical Senate vote aimed at pushing the plans forward. This is what he said earlier on a podcast from Politico.
There is no question that the rally in the stock market has based into it reasonably high expectations of us getting tax cuts and tax reform done. It also has based into it optimism on regulatory relief, which they've begun to see, and there's expectations. So I think to the extent we get the tax deal done, the stock market will go up higher. But there's no question in my mind, if we don't get it done, you're going to see a reversal of a significant amount of these gains.
So, Manusha and NetNet saying pass it or weep. Financial is one of the best performing sectors on Wall Street overnight, including Wells Fargo, up 4/10. It hasn't been a good year for Wells amid ongoing headlines about their fake account scandal. Will Frost sat down for an exclusive interview with the CEO, Tim Sloan, and asked whether he had withheld information about the true scale and nature of cross-selling at the bank.
We disclosed our cross-sell ratios in the normal course. It was a non-GAAP type of a measure. I think cross-sell is shorthand for relationship management. Clearly, there was an issue that we had within our retail banking business in terms of our incentive plan and the focus on selling products as opposed to providing the right service and advice to our customers. That wasn't elevated to the senior leadership, including me, until late in 2013.
Well, that's true, and very clearly in late in 2013. I mean, so the board review says you were aware before then, but you weren't fully aware of the magnitude in 2013 until 2013. November 8th, 9th, 2013, the Chief Administrative Officer in an email with you notes, we're trying to limit the damage of further terminations in the short term, hoping the LA Times story doesn't become national. Goes on to say the larger sales practice review needs to be done. So as you said, very clearly you're up to speed on how big an issue this is then, yet the following earnings call, Q1 2014, you mentioned cross-sell 5 times. And again, selective release of information there to investors. I'll go just one step further, if I may, Tim, because even 3 months before this became public, you were CEO and president at that point. You've been involved in firing Carrie Tolstead or pushing for her retirement at that point. So again, fully aware of everything. You were asked in an interview, June 16th, 2016, public interview, whether the cross-selling strategy had been pushed too hard, and you said no. I mean, what do you say to the investors that bought, reassured after 3 years of negative press on the cross-selling issue, read that interview from Tim Sloan, someone they trust, and were reassured about it for 3 months later to see that it was in fact a lie at that point, and the share price underperformance, they've endured it since?
Well, let me push back there. I didn't lie to, and I didn't lie to our shareholders. I didn't lie to any of our stakeholders. What I described was the fact that cross-selling, which is shorthand for good relationship management, there's nothing wrong with good relationship management. What we clearly had, and what we've talked a lot about, and you and I have talked a fair amount about it, is the fact that we had an incentive plan in our retail bank that drove inappropriate behavior. Since I've become CEO, we've dealt with that.
Sure, and we're going to come to that. This is the question you asked. On the topic of cross-selling, Wells has come under scrutiny for its strong sales culture. Is there any sense that the bank has pushed that strategy to the limit? No, was your response. Is that not misleading investors 3 months before this came out?
No, I don't think it's misleading investors at all, because I think the issue...
Is there any sense that the bank has pushed the strategy to the limit? Your answer was no.
Yeah, again, we're talking about the bank. We had an issue within our retail banking business, and we've dealt with that since I've become CEO.
Okay, but I beg to differ. I feel that investors watching now who bought the stock then and have endured significant underperformance since then because of an issue that you denied about will be feeling hard done by based on that. But
Wilfred, you and I agree on a lot of things. We're going to disagree on that.
Ooh, crossfire on CNBC with Will and Tim. John Flannery, the GE new chief, is taking out the red pen at the company as CEO for just 2.5 months. Flannery has already halted the use of corporate jets, a legacy left behind by Jeff Immelt for much of Immelt's 16-year run. He would reportedly have an empty business jet follow his GE-owned plane just in case there was a mechanical problem. Wow. The Journal also reporting that Flannery is expected to cut thousands of corporate-level jobs next month and scale back General Electric's corporate structure as part of it. President Xi of China says it's time for his country to take center stage as he opened the 19th Communist Party Congress. He lauded what he called a new era in which the party would lead China into the modern age, wealth, and power. Marty is in Beijing on day 2 in the aftermath after that monstrous, epic, landmark-making speech. 3.5 hours spanning 3 programs on CNBC, Martin. That's a record.
Indeed, yeah, it is kind of unprecedented for a Chinese president, right? So not quite the War and Peace of speeches, but pretty darn close. 3.5 hours stretching across 3 CNBC shows yesterday. What's happening today, Bernie? Day 2 of the Chinese Communist Party's 19th Congress is they've broken up into small working groups just to my right here at the Great Hall of the People to talk about that work report, which is essentially the speech that Xi Jinping read out over 3.5 hours yesterday. So what did that involve? It involved looking back over the first 5 years of his term and then also looking ahead to the next 5 years of his term. And he talked a lot about the economy, of course, wanting to make China broadly more open and more and more open, rather, but also about reforming state-owned enterprises, SOEs, making them better, stronger, and also bigger. And this is a controversial point. Because, you know, when we talk about mergers and acquisition, M&A, you take 2 companies, put them together, and they make one bigger company. The risk is with state-owned companies in China, many of them still weak, inefficient, and debt-laden. You put 2 of those together, you just get one bigger, weaker state-owned, inefficient state-owned company. So the key is he's got to do it the right way. We are trying to figure out still whether or not with, as he consolidates more power, whether or not Xi Jinping will continue down this reform path or not. What we do know is in terms of managing the economy, as he has control over all other parts of the country and the state, he's got his thumb very firmly on the economy as well. How do we know that? Because technically and officially, it is supposed to be the Prime Minister, Li Keqiang, who manages the economy. We know that is not the case anymore. We know that A, he's been politically sidelined by Xi Jinping, and we know B, that economic policy rests with and is made more by something called a leading small group, which is essentially a small influential committee which interfaces between the party as well as the government on economic policy in this case, and the head of that committee is Xi Jinping. Bernie?
Yeah, the chairman of everything, I think, as I was joking about yesterday. Marty, one of President Xi's legacies could be indeed his OBOR, One Belt, One Road initiative, the 21st century modern version of the Silk Road, potentially linking Europe and China and Asia via trade by land and sea. Our next guest, though, says, be wary, be suspicious. Many are taking a wait-and-see approach. Alex Capri is visiting senior fellow at the NUS Business School and joins Marty and me from the SGX this morning. Alex, thank you for joining us on the program. You know, whenever I talk about Belt and Road, whenever we talk, Marty and I talk about Belt and Road with guests, they talk about, oh, what a big gift of God in the mouth it is. You know, what a big infrastructure gift it is to multinationals. But it's much more than that, isn't it? It's about China, you know, wielding influence more than anything else.
It is indeed. It's a geopolitical strategy, of course. You know, there are many facets to it from the Chinese perspective. You know, it's an outlet valve for a lot of the overcapacity within China. It's an opportunity to get those steel companies, those energy companies, construction companies, et cetera, out there building once again along the Belt and the Road. You know, of course, it has geopolitical ramifications. It's a much bigger economic footprint. It promotes the renminbi as the major currency for loans, for transactions, for trading. So for sure. I do think, though, that there are some opportunities for Western companies, particularly when it comes to capacity building. There are issues with good governance, obviously. There are issues with transparency. And so this wait-and-see attitude, I think, will continue in the short term, and let's just wait and see what happens as this OBOR progresses.
Right. Alex, as Marty was saying, you know, if you take 2 lumbering zombie companies and put them together, you get one big, huge zombie company. That's the risk of, you know, enhancing, you know, SOEs. I mean, when President Xi says, you know, we want to become more liberal, we want to become more market-oriented, but, you know, the state is going to take the lead, and you know, the state sector is going to as well. He's talking out both. He was talking out both sides of his mouth, wasn't he?
Yeah, there's an inherent contradiction there. Certainly, you know, if you're going to put together 2 big SOEs, state-owned companies in China, many of which are considered so-called zombie companies, right? They're run inefficiently. There's a high degree of corruption. They're not particularly results-oriented because the government is continually pumping more money into these companies. And then to say, on the other hand, that the market is going to open up, it's going to liberalize, I think is a bit of a contradiction. There's no question about that.
Alex, this is Martin. Let me quickly jump in and let's get back to OBOR if we could. I mean, this is a huge, ambitious plan, part of course, of China's new foreign policy here. And a lot of people describe it as bigger, even more ambitious and more impactful, potentially, than even the Marshall Plan for Europe after World War II. My question to you is, on the part of business, bigger, even more ambitious and more impactful, potentially, than even the Marshall Plan for Europe after World War II. My question to you is, on the part of business, non-Chinese companies, do you think they are going to get a fair shake if indeed they do try and bid for some of these projects?
You know, I think that remains to be seen, Martin. Again, you know, nobody's really taking that big leap. You know, if you look at big Western banks, you've got Deutsche Bank that has said that they're, you know, very interested in going to be, you know, committing a lot of funding to One Belt, One Road around their smart, you know, supporting the Smart Cities initiative with Siemens and other multinationals. But again, there is a great deal of suspicion. So we need to see a success case. You know, I think Sri Lanka is an interesting example. Sri Lanka, as you may know, took on a huge amount of debt from Chinese banks and state-owned companies to build the port of Hambantota, which is this big deep-water port in the southern part of the island. And the business model was, you know, if you build it, they will come. You know, once we build this port, you're going to generate a lot of revenue and you'll pay back your debt. Well, they built it and nobody came. There wasn't a lot of market demand for it. So you know, we ended up seeing a debt equity swap where, you know, the Chinese said, look, you know, we'll take over, you know, I think it was up to 80% of ownership, and you know, you can write off this debt. So there's a lot of wariness around the model, you know, if you look at developing companies along the belt. So we'll have to wait and see.
Okay. All right, fair enough. If I can take you back to January of this year in Davos in Switzerland at the World Economic Forum, Xi Jinping spoke there, and of course he positioned China as a champion, as a flag waver for globalization, and that caught a lot of people by surprise. And I think people didn't miss the irony in this at a time when, of course, the U.S. is becoming more isolationist under President Trump. My question to you is, how do you expect the outside world to square statements like that when what he's doing at home seems to be protecting companies more and wanting to create national champions at the expense of opening up China's economy more to foreign competition and foreign investment?
That's exactly right. I think any business, any entity that is involved or doing business in China needs to understand that the invisible hand of the state will be ever present. It will always be in the background, promoting economic policy, subsidizing you know, preferred localized businesses, and it's not a level playing field. So I think that's clearly the case. I think secondly, regarding the statement that President Xi Jinping made in Davos, about becoming a champion of free trade, I think it's also very important not to confuse an expanding globalization footprint of China with China becoming a champion of a rules-based, sort of transparent order, because those are two entirely different things.
Alex, thank you for joining Marty and me. Appreciate your insight. Alex Capri from the National University of Singapore Business School. Marty will be on the back with us, of course, many times throughout the show today. She, of course, talking in broad strokes. You have to if you're going to talk for 3.5 hours. As he opened the big Congress in Beijing yesterday, one of the numerous topics, Chinese growth. And we've got the third quarter GDP print later today, expected to show further slowing. After careful consideration over the past 27 years, I come to the conclusion that I don't believe Chinese GDP numbers. It kind of fits the mood, doesn't it, in China? I mean, you know, the way they put it together, it's not quite the way the U.S. Bureau of Labor Statistics would put it together.
Yeah, that's right. And just a couple quarters ago, they also said that they changed the formula in which how the GDP is calculated. So we're going to be watching that figure today. It comes out at 10 a.m. Hong Kong time, and that's alongside a slug of September activity indicators. We already got earlier in the week a little bit of a teaser from PBOC Governor Zhou Xiaochuan. He was talking about to the G30. He was talking to central bankers as well as finance ministers over in D.C., and he expects in the second half of this year that the Chinese economy is going to be chugging along some 7%. So that's on the back of the 6.9% growth that we had in the first half of this year, and also in excess of the around 6.5% target that the Chinese government has set for the full year for 2017. So 10 o'clock a.m. Hong Kong time is when we're looking for the economy as well as the activity indicators. This is Xi Jinping when he was speaking to the Party Congress yesterday, and what he was talking about the state of the Chinese economy.
China's economy has been transitioning from rapid growth to high-quality development. We are at a critical juncture to transform our growth model, improve our economic structure, and change our growth drivers. To establish a modern economic system, it is imperative to go through this critical transition and achieve our goals.
Xi went on to say that he's looking to build a, quote, modern socialist country for a new era. And we were watching property stocks yesterday because he was talking about speeding up the supply of homes, that housing is for living, Bernie, not trading and speculation. And we got a nice spike in some of the mainland property stocks yesterday. Sunac shares up some 7%.
Why would they go up? I mean, if speculation is out, then you're going to take a big chunk of the people who fry property out of, speculating property, flip property out of the market, right? But I guess if it's social housing, that means housing for all. I guess that's how the market
And the idea is for the healthy development of the housing sector, and it makes up a big chunk of the Chinese economy. I believe something like 15%. So a stable and healthy growth of that sector would be good for the economy all around.
Yeah, but it sounds like either or. You know, it's for homes are for living, not for speculating. You can't have it both ways if you're going to have a free market. You know, if you're going to have a capital, well, then again, it's not capitalism with Chinese characteristics anymore. It's socialism with Chinese characteristics. That's sort of the new keyword in the new China as Mr. Xi defines it. So it's a little bit different. Was that your takeaway yesterday? It's that state control is going to continue, because that's what Marty and I have been talking about with guests about.
Well, he actually mentioned a couple times that he was going to allow, when he was talking about capital markets, to allow
deepening reform, right?
And to let the market play a larger role. He did say that.
Yeah, of course, with the states, okay. But, okay, thanks, Em. All right, Japan comes into play, top of the hour. Let's just do a quick check on the SGX and see where we are there. The Chicago market priced in over 100 points at the top, and it looks like we'll get about 120. 130, something like that. And South Korea is going to play too. June, we got 23,000 on the Dow. Is the Kospi going to follow suit?
Yes, Bernie, it is going to be following suit. We're looking at a strong start for the Korean markets this morning on both the Kospi and the Kosdaq, and this is just about an hour ahead of the rate decision coming out from the Bank of Korea at 10 a.m. local. Most economists surveyed are expecting the Bank of Korea to keep its policy rate at an all-time low of 1.25%, but much more anticipated from the Bank of Korea today is its revised economic growth outlook for this year and next. Currently, the Korean government and the IMF both have this year's growth forecast outlook for this year at 3%, but the Bank of Korea, however, has it at 2.8%. So if the Bank of Korea does revise upward its outlook for this year, this would be a major hint regarding future policy direction from the Bank of Korea. So we'll be watching these two numbers coming out today. And also overnight, the Samsung Developer Conference in San Francisco, the first major global event for Samsung since the departure of its Vice Chairman Kwon Yo-hyun, was held. We'll be watching for reaction from Samsung after we're getting some innovation plans and future growth engine direction from Ko Dong-jin, the head of the mobile business at Samsung, during this conference that happened overnight. Samsung did point to three things that they're watching, one of which is AI, and the second, a partnership with Google, and the third, connecting everything, all their devices under one cloud. allowed. So these three things in terms of what Samsung will be focusing going forward does put, I guess, a positive light on what Samsung will be doing going forward, given that the last comments from Kwon Oh-yeon was saying that the chip business, while it is doing very well right now, and while it did give Samsung...
Thursday, I'm Bernie Lowe in Hong Kong.
We're all over it.
The Dow breaks through yet another milestone, folks, breezing past 23,000, giving fresh impetus to the Nikkei, coming into play right now at fresh 21-year highs on the Kospi, opening at its own all-time high. Party time in Asia. Counting down to Australia's September jobs report numbers, crossing at the bottom of the hour. We'll have that. Matt will have that live from Sydney. And Seoul and Tokyo, as I just mentioned, come online. You know, we're not going to let you forget this. We're hitting record after record. And another record. Okay, here we are. 21,462. Whoops, sorry, it's a moving target there. 100 points, just as the futures market was calling for. Kospi at fresh all-time highs as well. The ASX now all open for business, 59.03. So let's get to it. The Nikkei at, again, 21-year highs. I don't know why it's so difficult to move from 21 to 22-year highs, but we're, of course, in a very narrow band with the Nikkei. Let's see how the yen is doing there. 112 and change, approaching 113. Nippon Chemicon indicted in the U.S. over price fixing, charged with conspiring to eliminate competition for electrolytic capacitors from 1997 to 2014. So if you're in the market for that, I guess take notice. And Hitachi says it's happy with its stake of just over 50% in Italy's Rail Signal Group and Soldo, and isn't looking to snap up more shares. So a little housekeeping in the Tokyo market. Let's get to the rest of the action, Matt, in Sydney, but let's go to June first, where she's a very happy girl on this Thursday because they're in record territory once again.
Exactly, Bernie. Very happy. Today we're looking at a record open for the Kospi. Yet again, we are looking at the Kospi higher and the Kosdaq also trading higher this morning, and the Korean won stronger slightly against the US dollar. The Kospi is at 2,488 points, and in terms of the best performing sectors, we are looking at, of course, the brokerages and the financials, which usually do rally on the days like this where we see record highs for the Kospi. In terms of the Korean won, we'll continue to watch the currency today as well, just about 55 minutes ahead of the rate decision coming out from the Bank of Korea. So while there is no change expected for this time's rate decision, today's press conference that will be given by the Bank of Korea Governor Lee Jae-yong is expected to be giving us color as to what the timing is and what the speed will be regarding future rate hikes. So today's press conference and also the growth outlook for this year are the two main things that the markets will be watching after the rate decision is made. Currently, the Korean government and the IMF have a growth outlook for this year for the Korean economy at 3%. The Bank of Korea is lower than that at 2.8%. So any revision upwards will mean a very strong hint regarding future policy direction. So that is something that I'm watching. Also, Samsung Electronics is in the focus today after we got quite some direction from Ko Dong-jin, head of the mobile division at Samsung, as to what they will be doing going forward with their businesses. Starting with the AI theme, Samsung has launched version 2.0 of Bixby, the virtual assistant that Samsung has overnight. Bixby now has 10 million active users, and the latest developments that we got overnight are showing that Samsung is catching up with Amazon's Echo and Google Home smart speakers. Bixby now will be recognizing different people speaking to it, and Samsung has emphasized that Bixby is now able to go into specific apps and do things on behalf of the user. Separately, Samsung has said that they will be going into a partnership with Google, and they will be bringing together Google's AR core framework to make AR apps for Samsung phones. So those are the two main themes that were outlined at the conference. That was a check on the Korean markets at the open. Matt, over to you.
June, thanks very much. The Australian market's been in play for an hour. 0.25% firmer now, continuing to build on this week's gains that we've seen for the Australian market, which is of course, trading at its best levels since early May. We're up 13 points, 59.04, 59.68 on the All Ords, 78.43 on the currency. Of course, we're waiting on that Q3 China GDP number. Could influence trade in the overall equity market and also Forex market. But before that, we will be getting jobs numbers out in Australia today. These are for the month of September. We're expecting that the economy will have created 15,000 jobs over the month, but the jobless rate is seen remaining steady at that 5.6% level, which is where it's been for some time. As you can see on our wall there, those numbers crossing at the bottom of this hour, and I'll be back to break those as soon as they cross. In terms of some of the corporate stories we're watching in Australia today, Australian pharmaceutical industries, this operates pharmacy chains across the country, out with profit numbers, and the stock bouncing by about 3.5%. It revealed that full-year net profit was up by 1.4% to 52.4 million. It will pay out a final dividend of 3.5 cents per share. The stock gaining, you can see there, 3.48%. Let's give you a look at what's happening with the New Zealand markets as well at the moment, because today is allegedly the day that we're going to find out which side of politics will form government in New Zealand. New Zealand First saying late yesterday that it will reveal its decision on which side of politics it will support almost a month after that inconclusive general election. So we will be awaiting Winston Peters' commentary. He says that he'll make that this afternoon. We've already heard from the acting Prime Minister, Bill English, who says that the National Party, of course the party that he leads, that won the most seats in the general election, have come to an agreement with New Zealand First, which would deliver a strong and cohesive government. But he says now he just has to wait and find out which side Winston Peters wants to go with. So despite having this agreement, no clarity from Bill English on which side of politics will form government. So he'll have to wait, Bernie, until this afternoon, apparently.
Apparently, allegedly, sources said to be close to the situation say he's loving it, isn't it? He's loved every minute of it. He just loves being the kingmaker, doesn't it? I just know he's like a little boy in a candy shop. I know Winston Peters well enough to know that. Okay, Matt, allegedly. Growth on the agenda in China allegedly today, with the Q3 GDP due out inside the next couple hours. One of numerous topics brought up in Xi Jinping's mammoth 3.5-hour speech at the opening of the Congress yesterday. Marty, our man in Beijing, with lots more. So China's waking up to a new era of socialism with Chinese characteristics. I wonder how the people are taking it. Marty?
Well, that's what Xi Jinping is telling people, right? So it's day 2 of the Chinese Communist Party's 19th Congress. And what's happening today is, just to my right off camera, you can't see it, at the Great Hall of the People, we affectionately call it G-Hop here, is they're breaking up into small groups, the delegates, about 2,300 of them, and they're talking about that work report, which is what Xi Jinping read out over the course of 3.5 hours yesterday. English translation, I think Eunice was showing that to you yesterday, was 65 pages long. So what it did was it looked back over his first 5 years, and it also looked forward to the next 5 years and what he wants to achieve. And as far as the economy goes, he talks about wanting China broadly to be more and more open. He talks about deepening financial reforms, giving greater market access to foreign investors, promoting fiscal, foreign exchange, as well as financial reforms. But the problem is, so far, from the limited number of people we've had a chance to talk to outside China, they're a little bit skeptical. Why? Because it seems as though this Congress is more about politics than about the economy here. It's about basically strengthening the Chinese Communist Party and also strengthening the party's control over facets of China, including the economy here. And I want to describe what is going on right here now, Bernie. Usually in China, it is the Prime Minister, in this case Li Keqiang, who should officially, technically be in charge of managing the economy. But in actual fact, that's not what has been the case for quite a while now, a number of years. Why? Because one, politically, Xi Jinping has sidelined Li Keqiang, and two, there's something called leading small groups. And these are essentially small but influential committees which act as an interface between the Chinese Communist Party and also the government. There's one been set up for the economy, and the person who heads that committee is Xi Jinping. So he's got his thumb very firmly on the economy. The big question now is what he intends to do with it. With regards to, let's say, state-owned enterprises, he said he wants to make them stronger and better, which sounds good, right? He also said that he wants to make them bigger, which is raising a lot of eyebrows, because with a lot of these state-owned companies, they're inefficient, debt-laden, not run in the best of ways or along the best commercial lines. So, you know, if you think about it, there is the risk if you put two inefficient state-owned companies together, all you get is one bigger inefficient state-owned company. So we're watching to see whether, as he continues with reforms, especially with SOEs, whether he does it the right way. Now, Matt was talking about Q3 GDP numbers. Those break round about 10 sharp Hong Kong, Singapore time. And the number we're looking for is 6.8%. Plus, we're going to get a clutch of activity numbers, indicators as well. Fixed asset investment, FAI, retail sales, also industrial production. If there's a silver lining in all of this, though, as China's economy slows, it's not that 6.8 number. It's more what PBOC chief Zhou Xiaochuan was talking about a couple of days ago at the G30 meeting of central bankers and finance ministers in Washington, D.C., where he said that there's a potential that China's economy could grow in the last 6 months of this year as fast as a 7% clip. So that sounds positive, but again, we'll have to wait and see those Q3 numbers due out at 10 sharp Hong Kong, Singapore time. Bernie?
You know, Marty, you got me thinking here. Since today is GDP day, you know, in years past, China's been accused of a chronic case of GDP-itis, fascination and obsession with top-line GDP growth, as if that number is a magic panacea to cover up all the problems below. But now that we're in this era of socialism with Chinese characteristics and probably enhanced SOE, posturing, it sounds like this GDP-itis is going to go on and on. I mean, they're going to pull out all the stops to stay at 6.8 or 6.9, or in the case of Joe, 7%. I mean, he put it out there. We didn't ask him to, right?
Well, there's always that possibility, right? But if you remember, Eunice and I yesterday, our China correspondent Eunice Yoon and I yesterday were talking about the possibility that they could get less hung up on actual growth numbers down to the decimal point, and instead start looking at and start presenting the economy in terms of qualitative growth, not quantitative numeric growth, but more how the economy is growing. And from what we know is the transition that we've talked about for many, many months now, this rebalancing, trying to depend less on manufacturing, less on exports, more on consumption, that is going along actually quite well. If I'm not mistaken, at this stage, consumption accounts for a bigger share of the economy than manufacturing and exports. So that's pretty good. But another way to look at the economy is new economy China. This is the big tech names like Alibaba and Tencent, etc., as well as the old economy, which includes the creaky state-owned SOEs. And the way I like to think about it sometimes is you've got the new economy in China dragging the old one, kicking and screaming into the modern age. And what kind of bearing Xi Jinping could bring to bear on the new economy. There are signs that the state and the party wants to have a much more visible and active hand even in the new economy. That's got a fair number of people worried, Bernie.
Okay, yeah. Well, the socialism label with the Chinese characteristic in early Asia trade today, pretty good. If, it's, you don't want to go up too fast because then you can crash really hard. So 21,440, that's a record of some sort anyway. Okay, as we told you, our next guest is that Hong Kong missed the ball and really lost the, the goose that laid the golden egg or something along those lines. Dong Tao, Managing Director and Vice Chairman of Greater China at Credit Suisse Private Bank Asia Pacific, joins us from Sydney this morning. Dong, good to see you. I haven't seen you in a while. Thanks for joining us. What do you mean that Hong Kong fumbled the ball on China's golden era? What on earth are you talking about?
Well, I'm talking about what happened over the past decade. Actually, Hong Kong did make some progress in the economic front. But compared to what China has had over the past decade, I think Hong Kong has missed a golden opportunity for economic transformation. Hong Kong is still stuck as a property economy, and that's what I mean.
What do you think Hong Kong could have been? I mean, what potential, what did we miss out on? What could we have been if we had done things right?
Well, the real question is, what could we get it done right? If you see how Shenzhen has evolved from a little fish village to somewhat of property construction yards, and then a financial hub of China, and then now becomes quite an IT center for China and perhaps one day for the rest of the world. This is kind of transformation that Shenzhen and also Guangdong in general has made. But Hong Kong has been sitting on the gifts from China, largely one from the tourists and second from the IPO floods from the Chinese companies. If you outside of these two, rarely I see any changes. If any change compared to the benchmark of China, it's on the decline, unfortunately.
Yeah. We don't, nobody seems to talk about Hong Kong as an innovation hub, despite what the government would love you to believe. Here's a little bit of trivia, Dong. I don't know if I'm sure you know this. I think a lot of our audience may not know this, but a famous company called DJI, which is the world's largest leading drone maker, was at its very beginning actually based here in Hong Kong. But then they found really quickly that they could do more and they had more support over the border in Shenzhen, so they left. That could have been a Hong Kong company and could have put Hong Kong innovation on the map, but we lost it to Shenzhen. What do you think happened there?
Well, Hong Kong keeps saying that we are not made of doing these innovations. The truth is, if you look at Silicon Valley in the 1960s, it's a cherry tree field. It's the biggest production of Silicon Valley that time was cherry. Okay, and what happened was you need a few conditions such as the talent movement of people, and you need to have a VC kind of to fund these startup companies. And you need ideas. Of course, Hong Kong always has the capital, but mainly with the stock exchange, while the VCs going north. If you look at the talent, Hong Kong doesn't have these IT talents, but Hong Kong didn't have much of a financial talent either. Imported talents from somewhere else. If the companies wish to do that and the government promote for that. Ideas. If Shenzhen has all these IT ideas, I think Hong Kong could benefit from that. But unfortunately, nobody wants to push for that. Of course, that's just one of the areas.
Right. You're right about one thing. The number one public priority, or people's priority here, is housing. I mean, housing first became an issue with the Great Fire in Shek Kip Mei in the 1950s. It's been 70 years, and we still can't get our act together. So we should probably be, we should be ashamed of ourselves, number one. But number two, they're still trying to fix it. The chief executive is saying now, if we can stomach more reclamation, then maybe she doesn't have to raid the country parks for land to build more public housing on. Do you have a solution for us, Dong? Because we can't seem to get our act together on this public versus private. I say that the government either has to go all out like Singapore and take command and has to provide the bulk of housing, or it has to retreat. You can't be halfway, control half the housing, and have your cake and eat it too.
Well, Bernard, your question is exactly every single journalist I talk to from Hong Kong asks me what the government can do. And that's the wrong question. In my view, the success of Hong Kong over the past 100 years has never really been done by the government. The government was part of that, but largely it is the Hong Kong people and Hong Kong companies getting the job done. I think what happened over the past decade is exactly here. Everybody's asking what the government can do. Well, the government is part of the problem, but the government is not the entire solution, in my opinion. I think what Hong Kong lost over the past decades, of course, there are many, many things, including housing prices. But the single most important thing, in my opinion, is actually the animal spirits of Hong Kong. It is the individuals, it is the private companies getting Hong Kong here And if we want to make Hong Kong great again, it has to be done by the ordinary people and the private companies, in my opinion.
Thank you, Don. I've heard that campaign slogan somewhere before. I think it's in the States. Make Hong Kong great again. Don, thank you for your time. It's good catching up with you, my old friend, Don Tsao, MD and Vice Chairman. Life as you know it could be about to change. We've heard this before, but this isn't about time travel or hoverboards. We're talking about not 2, not 3, not 4, but 5G. And Dan, I understand that China is going to be leading the way to ultra high-speed, rapid mobile service. But being China with their censorship, I guess that means the Chinese are going to get a denial of service on their smartphones faster than ever.
Very interesting, isn't it? And almost ironic to see China taking the lead in this space, Bernie. New research from a firm called CSS Insights is out with some fresh data on exactly what China's role will be when it comes to the uptake of 5G technology. And it makes for some really, really interesting reading. It says that China is going to be the dominant global player for 5G mobile technology. Of course, 5G, as you mentioned, is the 5th generation of the mobile network. It doesn't exist yet, but it aims to provide faster data speeds and more bandwidth to cater for the whopping amount of data that we're all consuming and creating on mobile. So have a look at this graph. It says as early as 2022, China is going to account for half of all 5G subscribers. And then the firm goes on to say that by 2025, China is going to account for more than 40% of the world's 5G mobile connections. It's fascinating, isn't it? Now, most of those connections are going to be on smartphones and on mobile devices. But what's also really interesting is that it says it predicts that 5G connections are going to reach 1 billion worldwide by mid-2023. And of course, in this region, which is seen as an early adopter of this type of technology, we have the likes of South Korea, Japan, and also outside of Asia in the United States. These countries all fighting it out to be the first to launch commercial 5G networks. But China is set to take an early lead here, at least according to CSS. So, Bernie, this is going to be fascinating to watch. But as I mentioned, this technology is still in its early stages of development.
I don't know. I can't comprehend. I'm still stuck on 2.5G edge half the time here. I'm really missing out on life in so many ways, Dan. All right, tension's palpable just ahead, heading down under for the latest Aussie jobs numbers. Matt will break